All right. Welcome to this week's episode of Going Live with Good Soil, where Matt and I talk about macro markets, Tesla, and the other stocks we like, Roblox, Lemonade, Rocket Lab. We go over lots of Q&A, and sooner or later, I'm sure we'll have another stock in our repertoire we'll be comfortable talking a lot about. But there's only so much time to research, and that's sort of the stocks in our we're focused on right now. But the macro markets are a big deal right now. That's driving the market more than anything. And format is, I stated before, this is being recorded on Twitter Spaces and YouTube Live. Sorry for starting an hour late today. We'll go back to our normal time next week again. Matt, how's things? First of all, congratulations, Matt. You have a new addition to your family.
Thank you. Yeah, we had baby number 6 was born early last Wednesday morning. So sleep is at a premium right now, and I'm not getting much of it. So apologies in advance if I'm a little more incoherent than usual this week.
Yeah,
But
no worries.
things are going well.
Yeah, it's a big deal. You're doing your part. Six kids now, right? 6 young Smiths, right? Is that about right?
Yeah, we're like reversing population decline, at least here. I think I posted sometime a while ago, like, the birth rate or fertility by country, and I was like, I think my wife and I are like second only to like Ghana or one of the African countries. I think has like an average rate of like
2 kids or something.
seven
Yeah.
kids. Yeah, so like we're just below that like top of the class, but
Are
I
you
think
trying
we're
to get
doing pretty
above
well
that?
for
You
Americans.
think you're gonna try to get above Ghana
No
or whatever
time
the
soon, that's
country
for
is?
sure. My wife and I are both just like, all right, time out. We got
I'm out.
our
Yeah.
we have like a 16-month-old and a 3-month-old too, so we've got like
Oh my
3
gosh.
really young kids,
Yeah.
plus the newborn. So it's like just a little thing like getting breakfast ready is quite the ordeal.
Yeah.
But
Oh my gosh.
anyways,
I'm glad you got an hour off here. This is probably like a nice hour break to do this with me.
it
So
does feel like a
thanks.
luxury to be working,
Yeah.
actually.
Yeah. All right. Well, probably about everyone's joined. A lot of people have joined. Let's start with, I guess, the macro markets here. And I put in the title the Putin-Ukraine conflict because I feel like it's not really a Russia. It's more like Putin single-handedly is trying to make this happen. And um, lots of people are becoming experts on this topic or studying hard, and we're doing the same, but really our expertise is about the markets and stocks. If you could, the markets to a lesser degree than individual stocks, I would say, but the macro markets, we like to talk about. And this is definitely impacting the macro markets. I mean, we just have seen the volatility and the swings in the market been pretty crazy every day, up or down 2 or 3%. And today there was a reversal after Biden's talk, and I think as we talk right now, markets are up. S&P 500's up 1%, Nasdaq's up about 1.1%, but it was higher just about 10 minutes ago, like it dropped like 1% in the last like 10 minutes, it feels like. So it's very volatile, and it might continue to be. What do you think, Matt?
Yeah, I mean, there's so much kind of fear right now. I mean, if things escalate further, you could imagine a scenario where, I think the big thing on everyone's mind from a like markets perspective is, energy prices. So if things escalate and you've got something of a, trade war with high sanctions, and the Russian natural gas, is kind of banned, then you could be in a scenario where, oil prices, which are already high, could go even higher. And natural gas prices are also really high right now, and that affects, obviously like heating, which is really important, especially in Europe. Like in Germany, they're highly dependent on that. But also, natural gas is used for electricity production. So you could have in a macro environment where inflation concerns were very high, kind of back in January when people weren't anticipating this kind of conflict. You could be just kind of adding gasoline onto the fire of inflation concerns, and that could really cause, I think, runaway issues for the economy. So I think that's
No, I hear you just fine. Yeah. Oh, Matt, Alex saying, okay.
Let me know if that's better.
Okay. Yeah, the audio
So
is good on Twitter Spaces, but Matt is trying to get his audio
yeah,
back on YouTube Live here. So far, everyone's saying audio is gone for Matt.
yeah.
Matt, how's
Alex
your
is saying
audio look?
it's good now, according
Okay,
to
good.
Alec. So
Okay.
yeah, so anyway, I think the concern is really just that like you potentially could have inflation really run away from you, and that's in a market which is already a little bit teetering on edge, and concerns about needing to raise interest rates to get inflation under wraps. That could be kind of the hair that, or the straw that breaks the camel's back in terms of like the overall economy rebounding. So I think you're seeing, we've had this trend of risk off for the last 3 months, and I think we all thought we'd sort of bottomed out, but I think with concerns like we have right now, that it could continue to play out where you may be in a more of a risk off environment, because there's so much uncertainty around how this could play out, and a lot of the experts I'm hearing from don't really see a very viable path for both sides to kind of back down in a mutually beneficial way.
Yeah,
So
I mean,
what are you thinking?
I think a lot of the volatility in times like this comes, there's a lot of uncertainty, macro market uncertainty, and the normal. It's the volatility is sort of exacerbated because there's no registered market maker. There's hardly any, the high frequency trading firms like Citadel and Two Sigma and those, they've replaced the market makers, the registered market makers, for being liquidity providers in the markets, right? And so they don't play by the same rules. They're not registered in the same way that market makers were traditionally registered, having to be required to put on two-sided quotes of a bid and an offer on every stock, or even in options quotes, index options, everything, And so you have this massive loss of liquidity providers in times of uncertainty like this, because the market makers would be still required to be providing these two-sided quotes. Even if they were a little bit wider, it'd still be volatile, but not quite as volatile as it is as you see these days, I think, in times like this, because all the high frequency traders do, it's too much risk for them. Like, they're used to making a couple pennies on every trade, or half a penny, or fractions of pennies. Things are quoted in like hundreds of pennies. They're used to making bang quick trades for a couple pennies here and there, and just making tons of money on that. But when times like this happen, it's too risky. They just turn off their quotes. And I think we saw that initially in the flash crash of, what was that, like
2010, I think it was, maybe
yeah,
11.
and then there was another kind of miniature one in like 2016, I think, or 15. So there was, you see these, and there could be another flash crash here. It could happen again any day now. I think that's what we're worried about, and we put on some hedges. We talked about a little bit last week. We kind of changed them for, instead of expiring like in a week from here, now we changed them to expire like in a month from now, and just put a lower strike price on it, just because the next several weeks we just feel the markets could remain volatile. I mean, the stability of the market moving 1% or less per day on most days, I feel like, is gone for a while, until there's some kind of macro market certainty backs, and you need the geopolitical situation and inflation risks and the Fed policy all to kind of be predictable again, before I feel like the high frequency trading firms who have taken over the role as liquidity providers feel comfortable in coming back to the markets in a staunch way where they normally have. So that's my read on the situation, on why things could be volatile, very volatile for a little while here. I could be wrong.
Yeah,
That's just my suspicion.
It's kind of interesting that you mentioned the flash crash. I mean, I remember watching that in real time. I was on a Bloomberg terminal when that was going on, and it was just like the craziest to see. But what you had out of there, I remember there were a couple stocks, I think, which traded for like a cent or something like that. Like maybe it was like Procter and Gamble. There were a couple trades that went for like a penny. It was just like insane, and so they ended up actually having to cancel those trades. And now we're in this environment where there's crazy volatility, not only in equities but in commodities as well. So just yesterday, the London Metal Exchange had to cancel a bunch of orders for nickel because the prices doubled in just a couple of hours.
Yeah.
And so like, you've got input prices, commodity prices kind of going crazy. You've got wild volatility there, as well as in like the places where you'd expect to see more volatility historically, in like tech and growth names and the equities market. So I think things are
with the
moving
nickel
at a
thing.
very
I
rapid
heard
pace right now.
Yeah, I heard on Bloomberg earlier this morning, Bloomberg News, that there's a Chinese investor who was short 100,000 of the nickel contracts on the London Metals Exchange. 100,000 of
Ooh,
them, and the price went
man.
up to 100,000 per ton. So he was short 100,000 tons of it, I guess, and the price went up to $100,000 per ton, or contracts. I don't know, but that's the type of thing that no one can. That's like the type of black swan event for that bank that's like representing that client, or that, I don't know how it works on the London Metal Exchange, but someone's got to pay for that somehow, and I guess they're canceling a bunch of trades already. So I don't know what's going to happen there, but there's a lot. It reminds me of when oil went negative that one day, and there's just some weird anomalies going on with the macro markets right now, commodities. It's affecting like this, and until we get back to some kind of predictability. I mean, the geopolitical thing, the Ukraine or Putin Russia, conflict is certainly taking center stage right now. And we did see, just as we got on here, there's, I guess, a quote. Zelensky said to ABC, quote, "I have cooled down on NATO. NATO is not prepared to accept Ukraine." So I don't know if that helps provide something for potentially for Russia or Putin to say, "Oh, we can now exit because Ukraine's not interested in NATO anymore." So I don't know if that starts the bridge for that or not, but I think that could be a way out where the geopolitical risks kind of subside over time. If there could be some kind of path to a resolution here, I just don't know what other way there is for a path in the next in the foreseeable future, though.
Yeah, I mean that certainly kind of opens the the door to some sort of resolution, but I mean it's hard to imagine that you have both Zelensky and Putin in power at the end of this. I mean, it kind of seems like you're going to have one of them go, or like I mean Putin in particular. It seems from all the commentary I've been reading, it seems like a lot of this aggression is really to protect his own status, and so if he, let's just say for argument's sake that Ukraine decided to agree not to join NATO and amend their constitution, and you know, I don't think they would give up Crimea. All the Ukraine experts I've spoken to have said that they're not likely to recognize that, given the way that their country's been treated right now. But I mean, if they can't get to that sort of resolution where they're offering some sort of significant accommodation to Russia, I don't know how Putin would kind of accept that and say, oh, look what we've won. Like, what can he tangibly show the Russian people as like the thing that he's got as a result of this really risky endeavor into Ukraine? So I don't know. I hope you're right, and I hope there's a path to back down here, but I'm not sure what it is. One encouraging thing I did see just this morning, though, was Chinese President Xi Jinping finally kind of weighed in with some strong comments, saying that the goal should really be for both sides to de-escalate, and that they would work with both sides to kind of facilitate that in any way possible. But basically saying kind of prolonging and escalating this war would lead to economic downturn, which is not good for any side, which I think is a good sign of reason coming from the Chinese. I think a lot of us may have been, at least here in the West, may have been concerned that China may kind of seek to use this moment to strengthen its alliance with Russia, or undercut some of the democracies in the West by strengthening those ties. And so I thought that was a good sign that China may seek to be kind of a broker of peace here.
Yeah, that would be great if China could step in and help influence a peace agreement of some sort. So yeah, we'll see what happens. I thought it was a big deal when the Israeli prime minister went to visit Putin a few days ago, and spent several hours there, and then flew immediately to Germany. I don't know. I thought there's some kind of diplomatic attempts going on with Putin, at least, and President Xi in China. He might have the best capability to change or influence Putin. So we'll see. Speaking of Zelensky and Ukraine, I mean, the last week we saw some news with Elon. I guess he had a Zoom chat with Zelensky. Some of it was recorded, and I saw it on Twitter, a clip of the last like 10 seconds of it or something. But he sent Starlink to tons of Starlink terminals to Ukraine, and even follow up with some tweets saying like, hey, make sure you camouflage it lightly and stuff. Don't put it near your, keep it, it could be targeted, right? And So there's a little danger there, not just for Ukrainians using Starlink, which is important, and I think they need some internet access when Russia's probably, or Putin's probably trying to shut down all the other internet communications. But it's, you and I talked about it briefly yesterday. This greatly increases the key man risk of Elon Musk in our eyes, like at least for the near term future, maybe longer term even. I mean, it seems like Putin and has held grudges, and the KGB, and they've done all kinds of nasty assassinations on people. They're known for that. And we've known that Elon's felt he's been a target for Russia in the past for disrupting their space industry, but now this is kind of scary that he's getting involved directly.
Yeah, I mean, certainly on the one hand, I just want to commend him for doing that work. I mean,
Yeah.
it's kind of sticking your neck out there to really provide something that was valuable, that the Ukrainians actually asked for. I think sometimes he gets criticized for the Thai cave incident, for example. It's just like, oh, like he's just trying to make headlines and take advantage of the political situation. But I think what he's actually doing is trying to help in a way that he can. So I do commend him for that. But yeah, it certainly comes with some risk. I mean, he's aggravating the Russians for sure. And yeah, I think taking an adversarial stance against Putin, has been historically bad for your health for a lot of people.
Are your life insurance risks? Yeah.
Yeah. So Elon obviously has a very good, security team, but it does kind of increase the risk in my mind that there could be some sort of Musk assassination, especially considering the fact that he's undermining their space industry so much. They were trying to, the Russians were trying to say, oh, well, good luck maintaining the ISS without the Soyuz, and Elon's like, oh, actually SpaceX can do that. And here he is kind of directly intervening in a military conflict. It's I could very much imagine that he's on some sort of Russian hit list now, and that's that is a bit of a risk in my mind.
Yeah, I mean, I commend him for sticking his neck out, but in the big picture of things, I don't think that was a good idea. If he's trying to make life, human civilization multiplanetary, and that's what he's trying to do. And if you think about his goal from kind of like, I feel like in my mind, from a first principles point of view, like he's the key man for that too. Like SpaceX, can be, if he was hit by a truck tomorrow or assassinated tomorrow, like Tesla and SpaceX could survive and do well. But are they going to make life multiplanet? Is SpaceX going to be able to make life multiplanetary, without Elon Musk if something happened to him? I'm not sure. And that's the biggest, prize, not prize, but the biggest, benefit to humanity he's aiming for. And it really is, in our view. I mean, in the big picture, and to somehow, send some Starlink terminals over to Ukraine and then get offed by KGB agents, 6 months later, it's not worth it in my mind for him to be doing that. So I'm worried. I hope he doesn't speak out too much in situations that could be dangerous for his personal safety. He's a high target on a lot of people's lists, and it's unfortunate when you have people changing the world that they're high targets for assassination attempts and such. We've seen it in history many times.
Yeah, for sure.
So anyway, not to sound so down, hopefully it's still a very low probability, but I feel like if it was like a 1% chance, now it's a 5% chance. If it was a 5%, now it's a 20% chance. I don't know. It's been increased. So hopefully it's still very low, but it's been increased, I'd say for sure. So on top of that, Elon also commented on ramping up oil and gas, as fast as possible, and nuclear too, just for, national security reasons. And I think he makes a lot of sense there with that. And, I'm not sure that gets him on a hit list or anything. It's unpopular, but I'm not sure many people, maybe some crazies out there, but there's no one like Putin with KGB, resources trying to assassinate him because of that comment. But it certainly, I felt like, was very controversial for him to say that by a lot of people. But I agree with that. I mean, just in the near term, if you're shutting Russia down and all the resources that they offer to the world, then we better ramp up our own oil and gas and nuclear to be less dependent on other parts of the world. I mean, what were your thoughts? You have a lot of thoughts on this, I bet, Matt.
Yeah. So, I spent a lot of time in the energy industry, on the renewable side, but I also, worked on some natural gas plants as well as a smaller coal plant at one point. So I'm pretty familiar with kind of the economics of each of the different kind of fuel types out there, and the strengths and limitations of all of them. And I think when you think about the cost of energy, we tend to get like a bill that just doesn't move very much. But in wholesale markets, in most wholesale markets, I should say, the kind of clearing cost for all electricity is typically set at like the marginal price for a natural gas plant. So there's let me know if I nerd out on this too much, but essentially there's like a physical characteristic of gas plants that's called like the heat rate, and it's essentially how efficient is this plant at converting natural gas into electricity. And so for a somewhat efficient natural gas plant, it may be like a heat rate of 7. And so essentially what you do is you take the heat rate, you multiply that by the cost of gas, and that gets you an energy output. So when gas was $2 an MMBTU and you have a 7 heat rate, you could get $14 electricity, $14 per megawatt hour, which is pretty reasonable. But now when natural gas price is like 5, then you're talking about $35 natural gas. So that's the price, the clearing price that essentially gets paid by all renewables, at least in most markets. It kind of depends on how it's structured. So there's a very real direct correlation to energy prices and the cost of natural gas. And it's not the sort of thing that you can just say, all right, well, let's go heavier on wind and solar. Like, great, I agree we should do that. But if you look at the total generating capacity worldwide, it's roughly 7 terawatt hours of the entire fleet. And wind and solar is only about 1.4 terawatt hours. And even there, they can't produce all the time. So the actual amount of energy they're generating is, a much smaller portion than, like 1.4 over 7. It's probably only about 25% of that amount. So I think last year there was about 200 gigawatt hours of wind and solar that was added worldwide. And so even if you double that, it's like, all right, we got to 400 gigawatt hours. Well, you're still not even getting close to like 7 terawatt hours of the global fleet. So there's no real option in the short term to rely more on wind and solar. So I think Elon's right that if you do want to kind of avoid drastic increases. I mean, imagine if natural gas went to 10, which is a reasonable possibility, then you'd have like $70 wholesale electricity costs. And so the amount that the end retail user or industrial user would be paying, would go up accordingly. And then it would be getting to the point where it's actually coal becomes more economical than it is. And so then you might start bringing coal plants back online, which is not in everyone's best interest. So these markets are really complicated, but I do think that it does make sense to kind of increase extraction in the short term of oil and gas. And that's not a popular opinion, but I think and bring back nuclear as well. I do think that's a really smart move. I hate to say it too, because I worked in renewables. I think we should be doing all we can to transition to them. But I think if we say, all right, renewables no matter what, and you make the cost of electricity go up by 10x, then you've got the unintended consequence of like increases in poverty, right? And so it's not a simple math equation, and this is not like there's no free lunch here. So you really need to think through all the different variables.
Yeah, I'm glad we have you to help explain it to the details. You certainly pretty well informed on this stuff, and understand it from a different perspective, working in the industry. So, yeah. So where do we go from next? So Elon, Tesla now, the Tesla business strength, seems to be doing well. The stock, flip flops with the market volatility, obviously, but the business itself seems to be doing very well. I mean, they just released their numbers for China today, 56,000, I think it was, for February. And that's, with Chinese New Year, being a huge, how long is Chinese New Year in China, by the way, Matt? Do you know?
Geez, I should know. It's been a while. I never actually.
Isn't it like a week or two or something? Isn't it?
Yeah, I think
long?
it's like a little bit over a week, and there's a lot of the workers travel back home to be with family, so there's like a decent amount of travel time from wherever they're working to where they were born. So
do you think they shut the factory down for that week and completely, or do you think, I haven't looked? I know there's like experts out there in the Chinese gigafactories that know this like the back of their hand, but I feel like they they used to shut the factory down, but maybe it's big enough where they still have some skeleton crews doing something minimal. I'm not sure for
Yeah,
that
I
week.
don't know those details either. I know like back when it was one shift, I know they did like in 2020, I think it was. But I
Yeah,
haven't been following it as closely since then, to be honest with you. You know, I kind of
yeah,
keep track on, you know, Troy Teslike, and there's a couple other folks who are like Moneyball, I think, is
yeah,
the other guy who does a lot of Chinese reporting.
yeah,
But I'm not as well versed on the details. But
yeah.
seems like it was a
I mean,
relatively strong month when you kind of consider
factor
the
that in.
amount
Yeah.
of downtime that there was.
I agree. Yeah, I mean, I think their Chinese factories are going to continue to do really well, and I think Troy Teslaike's, above the, I think he's in the 320s or or close to 330 for delivery expectations for this quarter, and the Wall Street analysts are predicting like 315,000 or something like that. So there should be a little bit of a beat, but I don't think the beat's going to be like it was last quarter, where what was it? The Wall Street analysts were predicting like 265 or something, or 270, and then it was
Yeah.
310,000. So it was like a big beat. It was like 20, almost a 20% beat, and so this time it might be like a 5% beat, and so you got to wonder, people are getting used to Tesla beating by a lot. Like when it only beats by 5%, is that going to be good news or bad news for the stock itself? So, short term movements, it's just, I wouldn't be buying short term options on the delivery numbers for April. That's all I'm saying. I'm not sure the stock's going to tank, but, I wouldn't be buying on rumors of Tesla beating by 5 or 7% versus what Wall Street expects for delivery numbers.
Yeah, I wouldn't either. But at the same time, I was kind of surprised. I don't know if you saw the note from Trip Chowdhury that came out. I think it was yesterday,
About
basically
the
saying,
plaid deliveries and stuff too.
yeah, the plaid. He said the plaid deliveries would be up about 15%, but it sounds like they were doing some digging at the plants, and sounds like he basically said that he expects Q1 to be massive. So I don't know. I'm kind of with you. I
He
don't.
says it every quarter, though. That guy says it every quarter, no matter what.
Yeah,
That's true. We're trying to
I
get him on
agree.
our channel, actually, as like a Wall Street analyst that's like uber bull. Just to, we haven't seen him on any other YouTube channels, really. So it'd be cool to get him on here and chat with him. But
Yeah,
yeah,
if
he says
anyone's
every quarter.
got a contact with him, we'd love to try to get him on here to kind of explain some of this stuff. But yeah, I agree with you. It's like, all right, well, I don't think Model S Plaid, even if they were like doubled, I don't think that really moves the needle on the stock in terms of like a huge earnings beat per se. So I don't know.
Yeah.
I'm trying to take a little bit of a grain of salt with Q1 in particular, especially since Zach was, I think, kind of a little over the top with the warnings of some of the short-term supply chain issues they were seeing. So
Hmm.
I'm definitely expecting gross margins to come down a little bit sequentially. But we'll see. I'm curious to see how Q1 goes.
Yeah,
But
me too.
the good news is like Tesla's trading at such a low like PE multiple now that it's like in my mind it's already like relatively well baked into it. So
Yeah.
it's kind of a question in my mind of how do they ramp from here, and what do the earnings look like in Q3 and Q4, because I think that's going to change a lot of analyst expectations once you kind of get some more normalized gross margin numbers in
Yeah.
there, and there's probably going to be a little bit more clarity around full self driving by that point as well.
Yeah, and this all, we're sort of assuming that there's stability in the macro markets, and then sometime soon. I mean, usually the macro markets aren't this unstable for this long. Usually it's, even in the COVID crash, there was like a really quick drop that lasted like a month or two or a month, and lots of volatility. And then, there was a V-shaped recovery and markets were off and just going up and stable, but in a stable way, for the most part. So I feel like this has been going on since December, this kind of instability, 2 or 3 months straight. It's pretty hard to stomach, but you got to think it can't last forever. Maybe the Fed meets later this month, and maybe, you got to think either the market gets used to the, conflict between Putin and Ukraine, or there's some kind of resolution started between them that, within a month, you'd think that the macro markets are going to be stable again. And then fundamentals will really dictate the price movement of stocks again.
Yeah, it kind of reminds me of something the spot gamma guy said a while ago. I think it was actually that, with all the kind of economic indicators that he was looking at, he basically didn't see any sort of short-term catalyst until the March FOMC meeting, which is next Thursday. So you got that FOMC meeting on Thursday, and then a big options expiration day on the Friday after that, on the 18th. So that was a week that he flagged like a month ago, as kind of being like the next potential, macro catalyst that he could see. So that's something, I'm kind of curious to see how that does pan out. You've seen certainly a lot more kind of bearish sentiment in the market in the last, 3 months, as you said, but it could be a good opportunity if we get some good notes out of that FOMC meeting, coupled with a nice options expiration. That might be the thing that could finally tip this into a bull market. Obviously not expiration. This is where my lack of sleep is coming in. Obviously not investment advice, but that's certainly a date that I'm going to be watching pretty closely.
Yeah. So was there anything else on our hit? I know we're going to do a lot of Q&A today, but was there anything else we wanted to bring up or talk about with other stocks or, Tesla or anything? And, anything you think of, Matt, or should we just go to the Q&A?
Yeah, I mean, macro's the clear driving factor right now. I mean, we can talk
story.
to some specifics around any of the stocks, but I think we should probably just open it up to some Q&A.
Okay. All right. First question is from Beer Geeks CA on Twitter. Do you think Tesla will put a gigafactory in Canada for the next North American one? I don't think so. I mean, Canada is a big, territorial country, but population-wise, economy-wise, it's not even as big as California. I think it's much smaller. I think, or I don't know, much smaller, but it's significantly smaller than California, is my understanding. So, I don't see that happening unless Canadian, governments tried to really woo, Elon and Tesla somehow. I just don't see that effort being taken by Canadian governments either. I haven't heard of that, but if they did, possibly, but I don't see it otherwise. What do you think, Matt?
Yeah, I mean, you certainly don't have like a cost advantage necessarily, with the labor. I mean, it's I think roughly comparable to like, the U.S. Cost of labor, at least, union labor in the North. So I think generally speaking, the non-union labor has been a little bit, cheaper, which is why you see a lot of the international companies kind of in the south of the United States. Yeah, I think the other factor I'd consider here is how critical Elon's been of the Canadian government, Trudeau in particular. Maybe if that government changed, I could see that him being a little bit more open to it. But he's been like he had that tweet comparing Trudeau to Hitler. So I'm not sure that Canada
not on friendly terms with Biden or Trudeau now at this point, calling Biden a wet sock puppet and Trudeau. I don't know. He's not making friends with the politicians in North America very well.
Or Russia, or
or Russia.
Maybe Ukraine's the next factory. No, probably not, but
I
don't know. I do think it's important to kind of keep in mind the political aspect. So I mean, he clearly takes that stuff very seriously. He hates red tape, and that's why he moved the headquarters to Texas. And so I think anywhere that he does move, it would have to be at a place that's very business, like pro business and business friendly.
Yeah. Next question from Martin Muldoon. Question: will Rocket Lab and SpaceX benefit from the turmoil in Russia, given that no one will want to work with them? I was just thinking about that too. I do think Rocket Lab will benefit and SpaceX will both benefit. I do think so. I think, there's been some, there was that comment by the head of the Russian Space Agency about, threatening to let ISS fall to Earth, or if there, sanctions against Russia, and there's other stuff I've seen, dug up on that guy that make their ethics very questionable. And one of the great things I think you see about the world kind of uniting, in a non-military way, is you just saw like McDonald's say, we're shutting down all our stores in Russia, virtually all our stores. At first I saw the headline 850 McDonald's is shutting down in Russia, and I was wondering like, does McDonald's have like 10,000 stores in Russia? Is this like just 5% or 8% of their stores, or so I looked it up, and they actually have like 850. So they're virtually shutting all their stores in Russia, which is pretty good. So I think you're going to see that in a lot of businesses and space too, and maybe you'll see a lot less of worldwide businesses trying to do something in space, rely on anything Russian. Whether it's governments or private companies, they'll just go right to SpaceX and Rocket Lab. So that's my thought. I think they'll both benefit, but it might take a little while to play out, a year or two to kind of notice it. Matt, what do you think?
Yeah, I mean, you actually saw that with the OneWeb space constellation, which was going to be a competitor to Starlink. They actually had a launch ready to go on Soyuz rocket, so they had all their satellites there, and now they're stranded. Like they've lost their payload because Russia's not launching them, and they can't get them back. At least
No.
it's unclear how they will get those back. So like that may be the death knell for OneWeb, which was in a little bit of a tenuous situation to begin with. So you've seen this. I think like obviously the government sanctions have hurt, but also the kind of the expense of the Soyuz and like how ancient that technology is, like that doesn't help. And then you've got private corporations like kind of piling on to the we're not going to do business with this dictator, kind of like social justice in a good way, right? Like, I think social justice can have a negative connotation, but here I think it's actually, a good thing. We've got people just being a little bit more cognizant of wanting to send their dollars or spend their dollars in a way that's not going to benefit, like autocrats who are, doing these terrible human rights abuses. So it reminds me a little bit of COVID, honestly, where you had, a trend that probably would have happened anyways, which was accelerated by this macro event. So you saw a lot of growth companies like Zoom, for example, that accelerated a lot of companies' use of Zoom to do virtual meetings. And I think you may have a similar situation play out here where a lot of space companies were trying to kind of wean themselves off of Soyuz and Russian launch services. And this may be just the accelerant needed to really benefit new emergent players.
Yeah. Real quick, I see a question from Evan Glonsman in the chat. It's about Roblox. Roblox now has a market cap of around 25 billion. Is there a certain level that you would consider converting some shares to Leaps, or would that make more sense with a company with a more predictable PE outlook? That's a great question, Evan. We've talked about that. We've thought about that. And if this was just like I think if it wasn't a macro market, like revaluation of all the growth tech stocks, if it was just like a Roblox blip, that, other growth tech stocks were doing well, but Roblox took a big hit for some, hit piece against, that recently came out against, kids being, preyed upon in the Roblox community, but where kids are preyed upon everywhere in internet communities. But if it was something like that, then I would say I would be more likely to do that. But because it's like an entire macro market revaluation going on, I don't know when that macro market valuation comes back to tech stocks, like the tide swings back to tech stocks in general. I think Roblox is a great company. We're still holding the stock, and I think long term it's great, but the Leaps is only like a 1 or 2 year time frame, and I'm not confident that we've seen this macro market volatility already last like 3 or 4 months. I could see, it's possible the macro market adjusts and growth tech stocks come in favor in 6 months or less from now, but it's also possible that it could take a few years until, macro markets swing back towards tech and growth stocks that don't really have a PE yet, like you said in the second part of your question, and people start speculating on things like Roblox or InsurTech like Lemonade. So some of the long-term call options on these growth tech stocks that we still believe in strongly, but could take years to play out. Even Rocket Lab, they're not really these companies that don't have an earnings yet. I'm not sure buying long-term options is a good idea at this time.
Yeah, I agree. I mean, what's the short-term catalyst? I mean, at least for me, when I started doing Leaps with Tesla, it was because I was kind of convinced that the market had the PE, the forward earnings wrong. So even assuming like a very low PE, I thought there'd be a pretty significant revaluation of Tesla. With Roblox, we're not at that point yet, and so what is the near-term catalyst that will say double the stock in the next 2 to 3 years? I'm not clear that there is necessarily one. And also another consideration is just, implied volatility is pretty high right now. So it may be better, let's say there's a favorable outcome or a conclusion of this war, and better clarity around macro in say, 6 months time. My sense is implied volatility may have come down by that time. Then you've got a little bit less theta decay to worry about because you've waited 6 months. And then maybe, I'm not saying to do this, but it could be a better time then if we see some kind of solid user metrics or something like that gives us, confidence that, that the stock is undervalued and that the market will realize that in a short amount of time. So for that reason, I prefer the equity right now, because there's not necessarily that short-term catalyst.
Yeah. And we could be wrong. This could be the absolute best time to buy the long-term options. I don't know. It could be, but it's just too risky for us right now. Too much of a flip of the coin to really feel comfortable one way or the other on it. So next question. Sorry. Let's see. From Scott Optendries on Twitter, with money likely to be put into oil infrastructure to compensate for Russian oil, will this slow adoption of renewables in North America? Matt, do you want to take that one?
Yeah, I don't think so. So it's not going to be easy to kind of change opinion around, oil overnight. A lot of ESG funds, just won't even invest in these assets. A lot of banks won't even work to provide financing for a project like this. So typically there's a higher cost of capital for, oil and gas deals. So in my mind, they're kind of separate markets. I mean, the kind of universe of financiers that will pay for, oil and gas extraction is different than the universe of financiers and frankly developers that are going to be putting in renewables. I think you need to differentiate between what's called the exploration and production, or E&P side of the energy business. And that's what Elon is saying needs the investment right now, and we need to do what we can to extract more from existing wells and resources, versus kind of new steel in the ground for plants which will create electricity. So I don't think anything's going to slow down renewables, honestly. They just make sense financially, and if commodity prices are going up and electricity prices are going to go up, that's going to make the economics of renewables by default look even better. Because if you were expecting to get $20 a megawatt hour wind, and then macro events force that to be $45 or $50 per megawatt hour, people are going to be developing as many wind projects as possible, and solar projects as possible, in order to take advantage of this kind of unique time frame that we're in. And frankly, the industry is already kind of at capacity. It's just these are very intensive projects. I mean, I was touring a 525 megawatt wind farm in Texas that was under construction, and it was like a crew of thousands of people. There were 191 turbines, I think it was, and you've got to dig these foundations that are like many stories deep and like 30 meters across, and you've got to fill it with rebar, and you've got to send tons of concrete trucks to fill in each of these foundations. Then you've got to bring in the tubes and the nacelles and all the blades, and it's like a supply chain logistics nightmare. Like, the guy that was overseeing it was just like, I'm never going to do a project like this again. It's so hard to find good contractors. It's so hard to kind of coordinate this. So it's a heavy lift to do this work, and there's the industry is growing like crazy, and it's going to continue to grow like crazy. I don't see anything slowing that down.
Good answer. All right. From Just Wandering, do you guys think Tesla getting an investment ratings upgrade could prove to be a near-term catalyst, since it will open up the stock to more institutions adding? I do think it could be a medium-term catalyst. I'm not sure. I'm not convinced there's going to be an investment ratings upgrade in the next month or 2 months or even 3 months. But I do think it would be great if it happened soon. But at some point it will happen. And when it does happen, I think it does kind of open the door for a new set of institutional investors to come into Tesla. I'm not sure they're all going to rush to the floodgates immediately, but I do think kind of like the rising momentum of investing in Tesla, the theme of investing in Tesla will become stronger amongst institutional investors, soon after. It's already becoming stronger now than it was like 3 or 4 years ago, right? But now that's part of the S&P index, especially. But once it gets to higher investment rating out, it'll move it up marginally. I'm just not sure how much, if it's going to be super meaningful or just like marginal. Somewhere in between is my guess, where it's just a nice headwind or tailwind, I guess, a nice tailwind for Tesla stock to continue its rise to what we think will be the biggest company in the world by the end of the decade.
Yeah, I agree. Yeah, I think it'll be a small catalyst, if any, but I think there's much bigger catalysts on the road. I mean, I frankly can't wait to see version 11 of FSD beta, which sounds like it's getting delayed again, but that's a much bigger deal for the stock price in my mind than the credit rating. Although I do think it will take the market a long time to digest that good news, if it is in fact good news.
Yeah. From Duhamel18A on Twitter, what's your take on the solar situation with Tesla? Storage seems to be growing, but solar is disappointing. Matt, do you have any thoughts on their solar? I mean, it's a commoditized business overall, right? But I guess they're trying to really prioritize the solar roofs, but it's been a little bit tougher than they thought.
Yeah, it's been less good than I thought it would be, for sure. Like solar roof, I was super bullish on solar roof when it came out. I did some math and found it had like a very reasonable internal rate of return as a residential owner, even in a non-sunny state like Michigan. But since then, they've really struggled with kind of rolling it out and with producing and installing it in a profitable manner. I think it's clearly kind of dragged down the profitability of their energy business overall. But you got to keep in mind that they're trying to scale it. So like Elon has said in the past that they're trying to scale this to 10,000 and eventually 20,000 roofs per week. They're nowhere near that right now. Excuse me, right now. But the goal is clearly to try to figure out what are the best techniques and installation practices in order to minimize the amount of boots on the ground and number of man hours going towards each installation. So in my mind, they're still very much in that phase of like the slow part of the S curve. So if you think of like where the Model 3 ramp was, that was a dreadfully painful process, and it took a lot longer than people thought it would take. So I'm not concerned about it yet, especially since it's not a bet the company situation. But if they don't figure it out eventually, then I will be, a little bit concerned that, this whole solar roof it has the potential to be just an absolute flop in my mind. And just on a personal note, I've been really wanting to put on a solar roof for a long time at my house. Like I got a quote just like 2 weeks ago or something like that, and the quote had like more than doubled from when I initially got the quote. Then there was like a $26,000 fee because I'm not in their territory. So I ended up just getting a normal roof because I was like, well, I need a new roof now, and I can't really afford to wait 5 years and kind of hope they figure this out. So a little bit disappointing, both from the business side, but also just on the personal side.
Well, I'll tell you from firsthand experience, the roof is an incredible product. It looks beautiful. It takes in a ton of energy into my power walls for me, and it's just a great product. It's like if and when I sell my house, I know it's going to be an asset and appreciate the house's value. It won't be, concern or hesitation like solar panels might be, so
right.
From that perspective, I think it's an absolute incredible product. Now, can they, deliver it and install it in a way that makes sense, that's profitable for them, and that customers are willing to pay? That's what they're trying to figure out, I guess. Yeah.
Yep.
Question from Martin Muldoon again. When someone asks the age-old question, where do you think EVs get their power from? How do you answer it? Matt, that's for you, Matt.
Yeah, this is one of the most annoying questions, and I know Martin isn't asking an annoying question. He's saying, how do you respond to this annoying question? But yeah, it's
what's a simple elevator response to a 5-year-old? Because I get this question too, and I just end up talking to myself in circles probably. But
so
how do you answer
it? There's probably two simple answers, and I don't know. I haven't really practiced it. So one would be just that the simple answer is you have the option to power it directly from the sun. If you have solar panels, you can convert that electricity directly to fuel for your car, which is, obviously not possible for an ICE vehicle. So that's one just very simple answer. The more maybe nuanced answer, but still somewhat simple, is just that, it's a cleaner option, even if you're generating from dirty sources or from a grid that relies heavily on, say, coal. All the studies that have been done on this question very clearly indicate that it's a cleaner overall, per mile driven, even if you incorporate full life cycle emissions. So like the EVs are slightly more polluting to build than an ICE vehicle is, for example. But if you take all that into consideration, even in a dirty grid, then you're still better off than driving an ICE vehicle. But the thing that is continuously happening, and I saw this during my entire career in the energy side, is that the grid gets just a little bit cleaner every single year. So you have some amount of coal retirements each year, and you're adding more wind and solar each year. And so that trend is going to continue to happen because it's driven by economics. And so over time, you can run the math now and say, okay, with today's current grid, even let's pick the worst grid in the United States. I don't know which one it is, but people have done this math. It's cleaner than an ICE vehicle, and it's going that delta between an ICE vehicle and the cleaner grid, say 5 years from now, is only going to increase over time.
Good answer.
So I hope that helps. But it's such an annoying question because it was like a legitimate question 10 years ago, and it's been like so thoroughly debunked that it's like people who are asking it just like haven't done their homework. So we've still got a ways to go of I think educating people of the benefits of EVs.
From Brett A. Goldstein on Twitter. Oh, hey, Brett, my buddy. What trades did you look at this past year and not take action on? Winners or losers? What did you learn from them? Oh, that's a great question. I think Matt and I have talked about a number of like growth tech stocks and even other value stocks occasionally. But for me, I remember I was talking about Matterport a while ago. I really love their technology. I think they have a real stranglehold on this new kind of business of using, mapping 3D home or, mapping 3D indoor environments into a 3D world. They have like the vast majority of that market by far, and they do a really good job with it. And, they were trading around like 25. I think I bought some for a short time. It's over like 35 for a quick before the market started crashing. But I'm glad we didn't really go heavy on that, and really we didn't take such a deep dive where we built conviction to go heavy on that, because now it's at $7. I'm looking at it. I'm like, wow, it went from like $35 to $7. But maybe that's a good time. If I still believe in it, I should consider, at least in my personal account, maybe buying some Matterport. I know we talked and we talk about on here sometimes Coinbase, and Zoom, we touched on and dabbled on, but we haven't really gone heavy on those as we almost did a couple times, I think. So those have worked out. Almost all the tech and growth, almost all stocks are down. So you're kind of happy that, but the stocks we are long on, like Lemonade, Roblox, even Rocket Lab, they're all down too, and Tesla. But, some of them to a lesser degree than something like Matterport, for example. So, yeah, I guess that's what I would say, and it's it's reassuring to know that I made some good decisions by staying away from some stocks, and not, when I look at all our current stocks and they're down, some of the stocks we almost bought are down a lot more. What do you think, Matt?
Yeah, the other thing that came to mind of something we didn't do that I wish we would have done in retrospect is, we took a pretty deep dive into hedging some of our gains around like the November, December timeframe, which, of course, when the market had just absolutely tanked after that, would have been, great to do in retrospect. But it's very hard to hedge gains in either a tax efficient manner or in a capital efficient manner. So it's like you either have to take some chips off the table, or you have to trigger some short-term gains, both of which can be very costly. So, we ended up taking a pretty deep dive into that and ultimately decided not to. And of course, hindsight's 2020. Wish we, sold everything and bought puts, right? But that it was not clear at all that we had the kind of macro panic and absolute like just dump that we were, or that the market ended up taking. That was not at all kind of an expectation in in early December. So I guess in terms of what we learned from it, it's okay. We Emmett and I have been talking a lot kind of offline about how to be a little bit more structured in hedging after gains and maybe like adding after some losses. So that's something that I think I've taken away from that experience is be a little bit more willing to buy when it's painful and to sell when everything looks happy.
Yeah, and we've shorted a few things successfully and a few things at the wrong time. So yeah, I mean, things there's things we've wanted to short that we didn't, and we wish we did, obviously, too. But anyway.
Yeah, one funny note on there too. I mentioned just like 2 weeks ago, I think I thought like Bed Bath & Beyond was a good short target potentially, and then like just this week who's the guy? I'm blanking on his name, but the guy from GameStop, I think it was
Ryan Cohen. Yeah, he
Ryan
announced
Cohen,
he's got like
he's like getting all involved in Bed Bath & Beyond, and they spiked like 30% in a day, and so I'm like, okay, I'm really glad we didn't touch that one.
Yeah. I saw that news. I was like, oh, good thing we didn't short that one. So, all right. Last question. One more question. Let's see. This is from J60931656 on Twitter. Do you plan on getting more into the genomics sector now than the CRISPR-Cas9 patent has been settled? So this kind of, in a way, relates. So many people pitch us all these stock ideas, like, oh, what about this stock, this stock? There's been a lot of like CRISPR genomic stocks thrown our way, and it's hard to. That's not my specialty. Like I know so many people are excited about genomic stocks, and we were tempted to go into some, but we just don't have the expertise to really understand that business space to be confident or have conviction ourselves personally on why we think those businesses are going to be worth so much. And they may very well be, but investing in like medical technologies, is far from my specialty. So yeah, I mean, I just don't know about the. I know Kathy Wood and ARK Investment are big on it. I have a level of trust in there, and there's other investors I respect. But at the end of the day, I really personally have to have conviction to invest in a name. I just don't know if I have the capability to get conviction on the biotech space. What about you, Matt?
Yeah, when I was doing investment banking a number of years ago, I kind of split my time between the industrial side and the medtech side, and our medtech practice really specialized in orthopedics. So I spent so much time kind of diving into that, speaking with doctors, kind of understanding what they're doing from like the actual surgeries that they perform and what tools are they using and why are they choosing those tools, and then what's the FDA approval process for like the Pfizers and the J&Js of the world to go through that. And it took like a long time of studying to get to the point where I felt like I had a good baseline knowledge, even just to kind of talk about orthopedics in an intelligent way. And I just don't feel that I have that knowledge base even close to it on what I think is frankly a more complex field of genomics. And so I think the technology is more complicated and the business models are unproven at this point. I mean, I think there's incredible reasons to be optimistic, and frankly I am, but I'm optimistic in like a vague way, not in a way that I feel I can effectively manage people's funds by choosing who the winners and the losers in this emerging highly technical space are. I think
it's not like Tesla, for example, like you can, or Lemonade Insurance, like you can understand the marketplace and the incentive structures around it to some degree. You put yourself in the shoes of virtually all the participants in the Tesla, ecosystem of, the whole, whether it's the competitors or Tesla decision makers or consumers or regulators, even like we've done enough research, we can understand that space. But to understand the genomics, space is just, that's like a career worth of work, and that's just not a career, what we've done.
Yeah, and I've done a bit of a dive on Invitae, and I'm like somewhat optimistic about them, but again, it's you don't know what you don't know, and I already know that there's very little that I do know within that space.
Yeah.
So, I think especially when we're managing other people's money, we want to feel that we have a very solid understanding of the investments that we're choosing and why. And like kind of vague optimism around a generic trend, I don't think is a good enough reason to invest in a significant reason. But
Yeah.
I do think I am optimistic about it in general, and I've played around in my personal account a little bit in this space. But it's been, all these names have been hit really hard in the last year or so.
Yeah. And one last question I see in the chat, I just want to answer real quick, is it's from the cousin of the lawyer who helped us set up our fund. It sounds like, and he says, "Is there a reason you have a $500,000 minimum investment in your fund?" I found out that that's his cousin's fund, or law firm that set up our fund. Yeah, there is. We've talked about this in the past. We just don't have a ton of the way we set up the fund is we're only allowed to take on 99 investors. And, before we get to that level, we can set up another kind of master feeder fund structure where it would open the door for 1,000 more investors or whatnot. But at the same time, it's just, it takes up a lot of bandwidth. There's been a lot of interest from, lots of people under 500,000 wanting to invest. But we want to we want to get to know each and every one of our investors, and we have lots of investors already, and we've gotten to know them all, which is great. But we just decided that's sort of the minimum for Matt and I to use our bandwidth for that portion of our time allotment versus researching stocks or making portfolio decisions or having more of a balanced life of whatnot. If we took on a bunch of $100,000, $200,000 of it, we'd have 10 times as many investors. Obviously, the average investment size would be much smaller, but we just wouldn't have time to dedicate all of that. And it's just not, we just felt 500,000 was the right mark at this time. At some point in the future, we may set up an ETF or something. And that obviously would not have any limit on the investment size. So, all right. Well, that's it for this week. And thanks everyone. We'll be on next week at the normal time, and we'll talk then.
Thanks everyone.
All right.